Good afternoon, everybody. Pleasure to have everybody join us for what will be the Q1 2023 webinar on the state of venture capital. Ramadan Kareem to all of you who are currently fasting, and Eid Mubarak in advance for next week. So I will spend the next 20-25 minutes looking at the current state of venture capital across the markets that we cover, the emerging venture market space. Following which, I will open it up to questions. So if anyone has any questions, please do feel free to share them in the chat or in the Q&A, and I'll be sure to get to them at the end of the presentation. And to be fair, this is quite a chunky presentation this time around. Lots to talk about, and I will dive into that right now. And for any of the content that you have on the platform, you're welcome to subscribe and get access to it on the platform. So we're in Q1, effectively first 3 months of the year, and MAGNiTT, as you know, is a platform focused on verified venture capital data. We currently focus on the Middle East, Africa, Pakistan, and Turkey, and I'm pleased to say that come H2, we'll also be covering Southeast Asia, starting with Singapore, followed by, in no particular order, Indonesia, Malaysia, Vietnam, and Thailand. So excellent for us as we continue to benchmark geographies and enrich the data set of MAGNiTT. So anticipate when I do the presentation at end of year, it'll include many of those data points. Where are we at? Take a step back. What happened in Q1 2023? Many of you are experts already, but we have had the impact of Silicon Valley Bank's collapse, failure of Credit Suisse in the general markets, an uninterrupted rise in interest rates, continued discussion around tech layoffs and cryptocurrency volatility, as well as a stock market correction to the end of the year with a strong start to the year and then kind of plateauing thereafter. Lots of discussion in the wider economic environment of whether there is going to be recessionary fears kicking in. And as a result, how has that impacted the wider startup ecosystem? Again, to put this into numbers, inflation, while the IMF had just reported yesterday a slight decline in inflation, is still at historic levels higher than what we have seen for almost 10 to 20 years. So against the backdrop of that, challenges for governments globally trying to address that. And as a result, the Fed continues to increase interest rates, some discussion of that being on pause, if not being potentially reduced, but also some concerns that if that continues to year end, the impact of that on the wider financial markets and the impact on commerce in general as companies need to address increasing interest rates at large. I mentioned this in the last webinar at the end of the year. That has a clear crowding out effect on the venture capital space. As banks are able to offer interest rates of 5% and potentially increasing, that means that you can go to corporates for treasuries as a safe haven, potentially with the US treasuries in between. Expectations on the stock exchange for returns would need to be about 10 to 15% for you to see credible growth, putting huge pressure on the venture capital space for LPs and GPs, at least for GPs to justify to LPs that as an asset class, that's something that they're keen on investing in. With expectations of needing companies to grow 25% year on year with regards to the opportunity cost going straight into FDs. Markets have been extremely volatile off the highs of what had been seen months ago, big correction into the second half of 2022, and almost plateauing, if not just a small increase into 2023. So nothing particularly remarkable about what's happening in the ecosystem from a stock market perspective. And yet a lot of news coming out in the media with regards to the collapse of SVB. I'm not going to go too much into the detail of how that impacted the MENA region, but obviously many VCs, many startups banking with the likes of SVB having direct implications for access to capital, and then thereafter the confidence in the wider banking ecosystem for companies that are raising funds in our region. What happened with Credit Suisse creating an impact for the wider financial services and the ripple effects of that on the venture capital space, and then the layoffs, a continual concern for many of the big companies and well-funded companies needing to take aggressive measures to allow their burn rate to continue and run rates to extend in terms of the efficiency of those companies. So that's the backdrop. Now, I'd love to tell you it's going to be an extremely positive presentation, but the reality is that this is a backdrop by which the venture data is going to manifest itself. So what does it mean for the global venture capital space, and how does the EVM fare? At a high level, repeating what I mentioned, emerging venture markets that we currently cover: Africa, Middle East, Pakistan, and Turkey. The aggregate figures for the amount of capital that was deployed in the first 3 months of this year was $1.2 billion. That is a almost 70% drop on Q1 from last year. Now, noting, and I made this very clear at the end of the year and many times last year, Q1 of last year was a record amount of capital that was deployed in Q1, almost reflecting a one-quarter shift in investment activity because of the delay in investments that tend to be reported or shared in the emerging venture market space. So not only is it a considerable drop, it's against the drop of a record quarter one that we have seen, or record quarter in 2022. But in terms of deal flow, it tends to show the appetite for investment activity, almost a 40% drop in deal flow in the geographies that we cover. How can we benchmark that? Well, we use a benchmark, in this particular case, CB Insights, that published their report yesterday for some data points. The US ecosystem, 32 billion in Q1, a 56% drop on Q1 2022. And at 2,500 deals, a 30% deal drop compared to the year before, a 65% in capital in Europe. So the figures that we're seeing here in the region are finally catching up with global trends in terms of investment capital. When we benchmark the likes of Asia, even LATAM, an extremely aggressive 80% drop in investment capital. And here in the region specifically, MENA sees a 13% drop, and yet a 55% drop in terms of deals and investment capital in Africa alike. So at a very high level, a lot of red across all of the ecosystems. How does that kind of show itself when we dig into the specific quarters? Now, for the first time, I'm going to just jump into a quarterly evolution. A lot of the investment activity that was spurred on by the liquidity in the markets back in 2021 saw record numbers, both in the number of transactions and, as you can see, Q1'22, a record quarter in terms of investment capital. Again, to highlight that the black segment are mega deals, deals that are $100 million plus in investment capital, saw that drive towards what was a very successful start to 2022. And again, when we brought out the year-end report, we had to keep making clear what made for at least a flattening of the investment capital was driven by what was a record Q1. But you start looking at the picture to year-end. You can see here, and you'll see this on consecutive slides, that each one is compared to the last time we saw these figures. So in terms of deal flow for the emerging venture market space of MENA, Africa, Pakistan, and Turkey, it is the lowest figure we've seen dating back to Q2 2019. And when you remove the mega deals, which tends to be an outlier, even reading international publications, for the first time in a long time, they're making it very clear to remove mega deals that can skew the results. You can see that this is the lowest funding dating all the way back to almost the pandemic era of Q4 2020. And what you see is 4 progressive quarterly declines in venture capital activity in the region. Again, let's benchmark that, not dissimilar to what you're seeing in terms of global trends. In fact, very similar, if not more aggressive when looking at the global markets. But the point that I mentioned, the record quarter that we saw here in the region was Q1'22. In the global landscape, it was Q4 of 21. So as we extrapolate out, we expect that we'll continue to see this evolution into Q2, if not Q3 of this year. Looking at the MENA region specifically, if you looked at it on the surface, 818 million, which was invested in terms of capital, would show that it was almost flat, as I showed you on this couple of slides beforehand. And yet the drop in investment activity is very dramatic, close to 50% drop. Again, highlighting that these figures have not been seen dating back in terms of deal flow to to 2018. And in terms of non-mega deal, again, the end of the pandemic year of 2020. So these are numbers to really begin to start to question what's happening in terms of the investment activity and what's driving the current behavior. Similarly, looking at Africa, that actually did see a softer landing, if not, again, when you include the mega deals, a slight growth on Q4 figures in terms of deals, which reflects the investment activity and interest in the ecosystem, dropped for 2020 for both deals and investment transactions. I think it's important to note the phenomenon of the mega deals. So we have seen big deals taking place in our region, and consecutively dating back to Q3 of last year, an increase in the capital in those deals and potential slight uptick in the number of transactions. However, these deals are far and few between. And as we look at specific geographies and the overall evolution of appetite by investors by stage, you'll see that there is a drop-off in late stage investments. But it is important to note, specifically in this case, 2 of the 3 biggest deals that took place at the beginning of this year were Saudi-based companies that received investments greater than $100 million. And this is a little bit of a dashboard to put the whole of the region in terms of context. So as you can see, almost an average decrease of about 50 to 60% of investment activity in terms of funding. And again, varying, interesting to point out, Turkey here did maintain an increase in terms of investment activity, and I'll come on to the geographies in a second. So clearly the investment landscape is seeing a dramatic decline in terms of appetite for investment activity in our region. However, that is not in isolation to the global venture capital space that is seeing something very similar. Are we seeing divergences? One of the predictions that I made at the beginning of the year is that you will begin to see a divergence of investment activity based on the government focus of each of the geographies. So here, to start off with, Turkey, only country in the top 5 to see a year-on-year increase in investment activity. And I'll come on to show you how that reflects with regards to capital. But across the rest, you can see double-digit decline in many of the geographies in the top 10 in terms of investment deals that have taken place. In terms of capital, positive, Saudi Arabia now ranks #1 across all of the geographies that we're capturing, $359 million worth of investment with a 13% increase year on year. Similarly, Egypt, 76% increase year on year. But you'll see just under the title and in future slides that 81% of the capital invested in Saudi Arabia was attributable to mega deals, deals worth $100 million plus. And similarly, in Egypt, 92% of that came from a single deal in Halan. So I think that's why it's important to separate at times these mega deals, because they can skew the perception of the actual underlying ecosystem with regards to the growth. UAE is an example that did not see a mega deal in Q1, saw a 50% drop in investment activity in companies headquartered in the UAE. And when you start looking at this evolution, this is the UAE and Saudi ecosystem, you can see that the UAE, for instance, has now had 5 progressive quarterly declines in terms of deal flow and almost a stabling amount of capital that's being deployed into companies when you remove the mega deals. Saudi will be a story to continue to watch. There is very clear focus on supporting startups headquartered in Saudi Arabia with a clear governmental drive in increasing investment capital, and deal flow has shown some volatility going back from Q2, 35 deals down to 22, 33, and now 30. I expect that number to remain stable and to continue to see growth in the kingdom, maybe driven by further mega deals, given the unicorn project that has been put in place with a goal of having 30 to 40 unicorns by 2030. So again, focus on specific geographies is likely to see increased capital. And you only need to see the headlines of the FT and Bloomberg highlighting the interest from global players into the local ecosystem for LP funding. And that is also trickling down into specific geographies. However, conversely, when you look at Africa as a case in point, the numbers, when stripping out mega deals, are a lot more stark. While we did see this growth in Egypt, when you remove that figure, you can see that a considerable drop in deal flow and capital that's being deployed. And in Nigeria, as a case in point, as another geography, almost flat quarter on quarter in number of deals and transaction volume. Other geographies that we continue to monitor, I think an interesting one here is that you can look at Turkey. Now, Turkey for the last 2 years has ranked #1 in terms of investment capital. But you can see very clearly now that that was driven by some mega deals in startups, the likes of Get Here, Peak Games, Dream Games. When you strip that out, the amount of capital that's being deployed into the Turkish ecosystem is somewhat alarming, relatively flat month on month. However, more activity in terms of deals, translating to more early stage investment opportunities in Turkey and interest from investors in early stage. Pakistan, which has many interesting facts, but also challenges from an economical perspective, is seeing decreased investment compared to years before, and it'll be interesting to track that investment activity as we go into 2023. So overall, a dashboard in this particular case, when we look at some of the more active economic metrics for geographies, Saudi Arabia being one of the key outliers for year-on-year growth, albeit in many of the geographies, a decline in investment activity in terms of transactions, all of which have seen figures in many cases dating back to 2020 when the COVID pandemic was ripe for the lowest quarters in terms of investment capital and transactions. How has that impacted deal terms? So at MAGNiTT, we've become quite granular and specific on deal sizes and in valuations. In this particular presentation, I'll focus on deal size, but if you go onto the platform, you can actually, one, look at the valuations and the impact of that at a deal level, but also in Q2, focus on charting out the evolution of valuations on the platform. Before jumping into that, I made it very clear that the big deals tend to skew investment activity. So in this particular chart for both Africa and MENA, we see what the contribution is for the largest 5 deals in each of those geographies. And as we get into even stating back from Q2 of last year, the participation of these big deals across the geography is taking account for a larger percentage of the overall capital that's being deployed in the ecosystem, reflecting that sometimes a lot of the noise goes to some big deals, but that the underlying amount of capital is beginning to drop, and that the wider ecosystem is seeing a lack of capital being deployed, with a large percentage being attributed to only the top 5 deals. Very similar trend, as you can see, that's taking place in Africa. When we look at the MENA region, interesting to note, another thing that we tried to predict at the beginning of the year is that a larger percentage of focus from investors will go towards investors that are investing 1 to 5 million and early stage investment. At a MENA level, and this is by number of transactions, not by capital, you can see that early stage tickets, 0 to 1 million, went 1 percentage point higher than the whole of 2022, with a slight decrease in 1 to 5 million. And that it stayed relatively even at the late stage investments for the first 3 months of the year. But when you look at it for Africa as a case in point, the 0 to 1 million saw an increase in terms of investor appetite, and actually a 3% drop in late stage funding by number of transactions. So clearly there are the beginnings, with only 3 months worth of data, of a shift away from late stage investments towards much earlier stage investments. Now, why do we predict that? Ultimately, in subjective conversations with VCs, many of whom were stating early stage investment is maybe a little bit risky. Late stage investment, given everything I said about crowding out and the ability of those companies to potentially raise again, makes it very challenging to justify late stage investments in this current environment. But companies that are raising seed or pre-seed investments that have a proven product market fit and have shown a lowering of their valuations to meet the increased demand of capital, or at least the buying power of investors to invest, in companies has meant that the sweet spot becomes companies that are raising $1 to $5 million and will make that money work for at least 18 to 24 months as we see potentially a recovery coming out of this market. Here you'll see the mean breakdown of investment. Again, at a quarterly level, aggregating all of the deals, the impact that we saw is that you're seeing a slight uptick in terms of mean, obviously accounting for the mega deals, specifically in MENA, where you saw an almost 4 million increase in the mean deal. But when you remove that and you look at the median impact for deals, again, this is a very simple indicator towards valuations because a driver, assuming dilution remains the same, is that the median indicator and change will see an impact on valuations. In some of these metrics, at least in Africa, you're seeing a drop, whereas in MENA compared to Q4, but clearly compared to the hype of Q3 of last year or beginning of Q1 2022, a drop in terms of the median deal size. More specifically, when you break that down by stage, mean investments clearly outstripping the mega deals that we mentioned, because this is specific to stages. At early stage, a slight increase in terms of mean, while it's flat in terms of median for early stage investments. A Series A investment on average has decreased almost threefold, and you can see an aggressive decline in Series B investment for the ones that were reported in both median and mean, therefore reflecting a slight adjustment, assuming the same dilution of valuations at those stages. Similar pattern, as you can see, even at early stage, a drop in both mean and median deal sizes, reflecting likely to be a more aggressive correction of valuations in Africa, but both at Series A and Series B, a decline in the average reported deals that are taking place. So in general, in summary, we're beginning to see a correction both in the amount that companies are raising, likely to also see the valuation decline as a result of that. And clearly, investors have the upper hand, shall we say, in the access to capital and the deal terms that are taking place. Very high level, what are the industries that remain popular in this challenging Q1 environment? Well, the story hasn't really changed, albeit decline in investment activity in each of them. At the emerging venture market level, fintech still remains the industry of choice. E-commerce, retail, seeing a drop of about 50%. In fact, the top three industries of choice have seen a 50% drop in investment activity compared to the year before. And in terms of capital, well, numbers speak for themselves. Fintech and e-commerce remain the two industries for which investors remain comfortable making investment deals. 57%, as you'll see from the title, of the total amount was in mega deals. So actually only about 50%, showing that 50% is still going to the rest of the investment landscape, but 82% of e-commerce deals. So seeing that if you were to remove that mega deal in MAGNiTT as an example, you would see that they would be very similar to the rest of the ecosystem, whereas only 50% of fintech investments came from mega deals. So fintech, the story that we may mention for the whole of 2022, remains the industry of choice for investors in this current environment to seek the opportunities of consolidation in that infrastructure play. How does investor appetite reflect in data analytics? So I tried to dive a little bit more into the detail. Now, before we jump into that, if you just read headlines, it's fascinating to read that there is a belief that there is a lot of dry powder and LP investment interest in the venture capital space. Crunchbase just yesterday mentioned, despite the slowdown, investors in private companies still hold record amount of dry powder at around 580 million as of the end of 2022. I find that quite remarkable, but that's their statement. Many of the other publications highlighting what I said earlier in the webinar, many people are coming to the region. In fact, the All In Pod, my weekly podcast that I listen to, went for 10 minutes talking about how Silicon Valley's most prominent firms are going to Saudi Arabia. And they specifically stated because the LP market is closed in the US. And therefore, you're beginning to see a flurry of activity of investors to the region to support startups or to raise funds to deploy capital. Whether that is then matched with local deployment or not will be seen in the numbers later this year. But clearly, from an investor perspective, there's claims of dry powder and interest in our region. We have seen announced deals to date, MEVP, SVC in Saudi Arabia, DFS, Novastar in Africa, and VCAFAD. So there is announcements even of funds. Now, whether that is fully available for deployment or those are announcement funds, i.e. announcements to close funds, isn't ever clear from some of the press releases, but there is at least the announcement of funds. Now, how that then translates into the deployment, we will continue to track into the numbers. And as I always say, we only report the numbers. We don't know whether some of the deals are not happening or are happening offline and not being reported. But interesting to note again, previously we've only ever looked at this annually, but we broke down this chart, does the evolution of the number of unique active investors or entities that have made investments in EVM companies by quarter. So if they made an investment in a quarter, it doesn't then transcend into another quarter. It is unique active investors per quarter. And you can see that we are the lowest level for the last 2 years, while the actual participation from international investors in our region is also at the lowest. So not only is it in absolute terms the lowest number of investors participating, but the interest from international participants has also declined, which can be worrying, given the flurry of investors that are coming to the region in the hope of raising LP funding. Similarly, for the MENA region, the lowest that we've seen dating back 2 years. So a very similar trend compared to what we've said historically as a growing interest from international participants. But now we're seeing close to the lowest level that we've seen in terms of international participants, but in absolute terms of the number of investors that are investing in the region, the lowest going back to 2 years. And again, similar trends that we're seeing for Africa. But we are seeing some investors more active than others. One thing that is clearly supporting the investment activity is the return of accelerators. For those of you that were joining webinars in the midst of COVID and even in the post-pandemic period of early last year, there were many challenges with accelerators being able to operate virtually as effectively as they did historically. Well, now you are beginning to see more accelerators where there is a sweet spot given the current valuations and the need for access to capital at the very early stage. But here you can see in both Africa and in MENA, some of the more active investors by number of transactions. But also there are, through this, certain entities that are making big bets, whether they're 1 or 2 investments, that are seeing deployed capital. And this is the ranking of them by the amount that they deploy. Again, a feature that you now have on MAGNiTT, individual participation of investors that you can access their funding rounds, as well as ranking of all investors by investment capital deployed, number of transactions, as well as a filter for the number of exits so that you can begin to work out the return on investments that they've actually done. A note here, so tomorrow I'll be going to Southeast Asia, and at the beginning of the presentation, I mentioned that we will be launching Southeast Asia on the platform. Why are we doing that? More than ever before, interestingly, when you look at the headlines, it's either a lot of headlines talking about Dubai and the UAE and the wider Saudi Arabian ecosystem in terms of LP funding. But the other story that keeps resonating is that Singapore is clearly solidifying itself as a hub for the wider Southeast Asian, with a lot of capital coming from China into Southeast Asia. Similarly, and I mentioned this in many conversations, given the removal of the restrictions post-pandemic or in the environment that we're currently in, we are seeing a lot of trade delegations from Southeast Asia into the Middle East and vice versa. Interest for cross-pollination. Now, I don't want to front run the conversations I'll be having next week, but it's interesting to note VCs from Southeast Asia keen on raising LP funds, not dissimilar to the headlines that we're seeing from US and Silicon Valley, to potentially deploy locally and in their local market. But more interestingly, when you're seeing companies raising these mega rounds based out of the Middle East, where do they look to deploy and grow? There is a clear interest in creating unicorns in our region. And to be able to do that, they need to show growth potential. There are many challenges with the broken down demographics of the Middle East, not completely dissimilar to Southeast Asia, but the opportunity right now, while valuations are a little bit lower for acquisition or inorganic growth into these markets, is ripe. Never have there been more interesting opportunities than you will see right now, where in the absence of funding, M&A activity and acquisitions becomes interesting. And therefore, we see these trade delegations of Southeast Asian government officials looking to promote startups into our markets and vice versa. In fact, if you just look at an investment landscape perspective, this chart that we shared on an article on our social media highlights the growing interest of Southeast Asian and East Asian investors in Middle East and African, Pakistani, Turkish startups dating back to 2018. In 2018, only 14 institutions had made investments in those geographies. Last year, 91 different entities had made that investment, 42 of which are headquartered in Singapore. And interestingly, when you look at the breakdown of the geographies, the benchmarking, which I believe will be very interesting, will create transparency across these markets. At a very high level, Singapore, considered to be very much like the UAE, where historically there's been the lion's share of investment capital, has a population size almost or thereabout similar to the UAE, with a GDP per capita that's very similar. So you see a central hub historically for investment capital. Then when you break it down into the neighboring geographies, each of which have different population sizes, GDP per capita, and also investment capital divergence, you can begin to find comparisons, at least at a high level from a venture capital perspective. But interestingly, when you speak to the operators and the VCs, the same opportunities, but challenges of a fragmented market across Southeast Asia that need to look for scale, and most importantly, and I'll come on to that, a lack of exits. One of the challenges that's been identified from many of the VCs that I've spoken to and government entities in Southeast Asia, not completely dissimilar to the challenges that we face here in the region, is we have not seen an acceleration of exits or exits that have given ROI to investors, and they are desperate to see potential opportunities for exits and growth across the two geographies. And that's one of the reasons that we're expanding now. And that's one of the reasons that we want to create that data transparency. And one tool that you can use on the platform as a visualization is a market map. And here you'll see, and there's an article which I'll ask the team to share in the chat, which puts a market map visualization of all the investors in East Asia and Southeast Asia that have invested in the MEAPT region. We do see a continuation of the trend of increased exits in our region. However, I think it's fair to say whether these exits at these current markets are more trade sales or lower valuation exits, given the lack of investment capital, than ROIs for investors. At a high level, there has been 28 exits in emerging venture markets. Specifically in the MENA region, 11 year to date. We did predict by year end, it'll be another year of M&A activity. And I'm still confident that that will be the case as companies look to consolidate within specific markets. And even in Africa, while it's still low year to date, we anticipate that that will continue. Even within, when you start looking at some geographies, specifically here, you can see Middle East is similar to last quarter, some geographies slightly higher, but the trend seems to be very similar at a geographical level compared to what we saw in Q4 of last year. One interesting point to note is across the geographies, the cross-pollination activity that we continue to mention, defined as a company in one geography acquiring another company in another geography that is not historically been the same, i.e. MENA into South Africa, Africa into Turkey, Middle East, or outside of the region into a particular geography, continues to be, given what I've mentioned, market access plays into geographies for companies that may be larger looking to enter into our market. And we'll continue to track this on the platform. So this is a bit of a summary of what we've been seeing in the first 3 months of the year. I mean, how can MAGNiTT help you? For anyone that's using the platform or interested, just in the last couple of months, we've included funds data on the platform. You can track all funds that have been publicly available, including a tracker of all the LPs into those funds. We now have analytics data on startups. Historically, this has always been done. And what I mean is visualization of the number of funded companies, number of founded companies, a breakdown by demographics on the platform at a startup level. All valuations have been proxy and estimated based on data analytics, as well as surveys that we've done with investors to calculate that, including investor deployed capital. An upgrade of the startup directory, which now allows you to view all of the filters in startup view, funding round view, market map view, and funding evolution. And if you're interested in API access, you can reach out to the team, sales@magnitt.com. And these are some of the tools that we continue to try and develop, whether it's the advanced analytics tool, the directories tool, or the APIs. And in Q2, we'll be launching a people directory so that you can actually identify the founders and the GPs of VCs on the platform, including the contact details where relevant. All charts, as I mentioned, that were deal tools for deal size can also include valuations. Singapore data will be available in Q2. Customizable market maps for investors. Currently, they're only available for startups. And you will see more video content on the platform moving forwards. With that, I thank you and I will stop, but I'm more than happy to answer any questions that people have. If you would like to share them either in the webinar chat or in the Q&A, I'll be able to support in answering those. Again, if the team can just share the link for the reports and the market maps for anyone that may be interested. No questions? What sort of multiples are you seeing for Series A? For the time being, assuming the multiples on revenue at the moment, we do not have revenue multiples to be able to provide. We are seeing that dilution remains somewhat consistent. However, what we are seeing is that, as I mentioned earlier in the presentation, that the deal size is considerably lower than it was earlier. Again, multiples will be very contingent by industry, sector, and geography. So I don't have a specific answer to give on that. If there's no more questions, then it makes my life easier. I'll just give another minute. Great. I thank you very much. I will send you a summary of the email, including a website link to the video, the reports, and if you would like to reach out to anyone, please feel free to send me an email directly and I can connect you with the team. Thank you very much.